What's up, guys? Can you hear me? Okay, that's great. How you doing, guys? Hi, let's start then. Let's have your questions so we see what you need. Guess somebody had a question that if you have multiple monitors, can you save it? Yes, you can. Just save it here. Save the workspace. You can have 2 monitors set up, 3 monitors set up, whatever setup you have, and once you save it, it's always going to be that way. So I recommend you have like multiple setups. Like I have a setup for like 1 screen and like 2 and 3 and 4. So in case I move or I'm in the office or I'm in a different spot, I have like different setups. So I don't have to keep doing a different setup every time. So yeah, you can save multiple ones and just you have it whenever you need it, basically. Hi, Tina. Trey. Okay, guys, let's have your questions. Since it's not gonna be a long one, because I need to sleep. Since I just came in. So, what do you guys got for me? Looks like Bitcoin is dropping a little bit. I see a pattern when some of the pre-market risers seem to go for a few bars and then crash. Yeah, that's, yeah. A lot of pre-markets, man, they don't hold. Most of them do not hold because either the news is too fluffy or they are just pumped. If they are pumped, I normally don't like touching them pre-market. I don't even like touching like pumps right now, not in these markets. So if it has news and you see it keep going, you can, but I would say 80-90% of them they crash. That's why I like to short these more, just because of this, of what you're saying. So if you notice here, like this thing would go like when like stuff, especially stuff like that, like when you have a 3 in the morning a bar, like literally with no volume, like very low volume like this, like, yeah, I know it's a lot of volume, but I mean it jumped from 240 to almost 340. That's a dollar move for a $2.40 stock. So I would just be careful when you see something like that, because mostly it is a pump and it's gonna drop. If you see that consistent volume and it's just going up slowly and it's just building momentum as it goes, this is more of a better play in my opinion. But if you find these spikes, especially like really early, like 3 in the morning, once the market opens at 4 a.m., just like bam bam, and then it just slowly just keeps going down. Like in here, it just basically people like that started trading early, like Webull and Trade Zero and stuff like that, they got stuck in here and they started like averaging down. So that's why when it even got some more volume, it just dies out. It's done because it was just a pump. So if you notice that you just the market keeps going, and then yeah, it gets this spike here when the market opens, but then it's done. I mean, most of the day, if you even put, I can put another line here. So this is another downtrend basically. So it's a downtrend. So yeah, I would just be careful with these moves here in the morning. But I prefer more of a consistent move. Yeah, if it pulls back and continue going, and I prefer it to go at least at like 7-8 a.m. Eastern time, at least, that it keeps going to that time. Because if it goes to here and after 4:30, it drops from 4:30 to 7. Like that's like 8:30 p.m., 8:30 a.m. So that's before the market opened by an hour. It took all this dive, so it basically lost. If you notice, like where we started, it went all the way down to where it started. So all this was basically like this whole area was useless. So if you notice, like this, basically all this here was useless. So you can just delete this, and basically you started from here. So all this here was worthless. It didn't exist. Yeah, I mean, because you dropped down, you basically started again right here. All again from here. You basically started again all the way. So this was the move again, but it was another pump in the. So yeah, so be careful with these moves. That's why I prefer shorting these. But sometimes you get these, like APM here, like BPM. This one I kind of seen it happening, and that's what I'm saying. Like you get the pump early. Yes, you got it early here. It was a tiny little pump, but over here it continued. Like it didn't keep dumping. It actually kept going. Yeah, it did a pullback, but I put that line here and kind of like when the market opened, it went through that and it went through the highs. So this was a good trade for me here, just going long based on this one. But then it dumped also. But again, most of these dump. So you have to have an open mind when you play these stocks that 80-90% of them will dump. It's just a rule of thumb. They don't keep going. Again, like the stuff we see, like CRBP, Hollow, BMR, all that stuff is not the norm. This is the norm. So you try to get your money in and out quick and just call it a day. Trey, okay, no problem. Trey, hi, how do you get the drawing toolbar pinned above the charts? From here, right there. So you need to go to settings. I'm not sure, can you see it? No, you can't see it, unfortunately. Okay, let me see if I can. Let me see here. Let's see if you can see it now. Yeah, here you go. So if you press here, it's right there. So you go to settings, my tools, it's right there. And that will add on every chart, and then you can edit it, add whatever you want in it. You can, here you go, pin it, like always on top or not. I keep it always on top, but that's your option there. I know cheap market, some stock go high and then your open market it crashes. Yeah, again, it's the same thing. Especially now, it seems that lately pre-market has been where the money is made. So most traders just trade pre-market and then just the first 5-10 minutes, and then they just dump everything and they're done for the day. So that's why a lot of people are just taking profits early this now. So by 9 o'clock, like for me, it would be like for you guys like 10 o'clock. 10:30, the market is done. So now everybody takes profit even before the market opens sometimes. So you need to be aware of that. Yeah, again, Tina, so this has lately been the case. Before I never traded pre-market. I would wait. I still prefer not to trade pre-market for my style, because I like my moves like more consistent, especially then I'm going short side, so I prefer the market to kind of slow down a little bit so I can see if I'm gonna short it or not. So for my style, I prefer sometimes to wait, but if I see a runner pre-market and it's like a stable runner, I'll take it. But for my style lately, with the shorting, I prefer to wait at least like 9:40, 9:45 is when I start taking like my bigger positions, because that's when I see how the stock is reacting. Is it gonna keep pumping or is it gonna dump? And also sometimes I take shorts pre-market. So if I see a stock already started dumping and it's following a trend, I can take a short on it. But pre-market is a little like for new traders. I think pre-market is a little rougher because you guys like not used to playing bid and ask and being quick with your entries. It's different for new traders. Pre-market is kind of very harder to get because you're not used to limit orders and selling on the bid and ask, and you don't know how to use active trader or whatever platform you use. You're gonna have like shortcuts, so it's kind of like harder for new traders. So I mean, you can still trade it, just it just takes a little bit more effort. You need to be quicker, and you also need to be familiar that these stocks drop pre-market too. So you need to be quick, take your profits quick, and if you're in the profit, just start taking profits like right away. Especially if you're in pre-market, I take profits quick in pre-market because pre-market dumps fast as it goes up. It also dumps, so just something you can think of. A CHGT based on levels and trend lines. How do you identify levels with these small cap stocks that are dead for long but going new price levels based on news or I just go back, man, back in time. That's all. Like for this one, it did have a lot, so that's why I like this stock. I like stocks that never ran before. This means, like, as you see here, this basically went all-time high in here. So that's why I traded this one. I was waiting for this one to go. I was hoping for even further. Like I was hoping for like 550 maybe. But I normally just go back in time, man. That's all you need. Just like for this one, like as you see, I just go back in time as much as I can. The further, the better, and the more, the better. So as you see here, this one had a lot of data, so you can just I go based on the data. Of course, I try to concentrate more on the levels that had volume. So if you notice here, these had volume. So these are important levels, like these and these. So this is where they had the last pumps, basically. And that's where I try to start at. And then I go down or up based on where the stock is at. So if the stock is like trading here, then, I'm going to start drawing my lines here. But since the stock is trading in this area, I kind of did my lines here. I just go based on whatever lines have been tested so many times. Basically, that's about it for me. Like you see the areas here, like this area and this area here, it's been tested so many times. And so many times, even if you go back all the way to here. So that's how I build the lines. It's the repeating patterns, man. So as long as it repeats, I know that these levels are where either you have buyers or sellers. And also, also from there is if you had, for example, stuff that I look at, like something like this here. So I know that now there's bag holders in this area, like all the way to here. So I know for a fact that if the stock comes closer to this area, that we're gonna have a lot of selling in here, because you have a lot of bag holders that have been holding for like 7 months. All this, they've been holding through this, and here too. So you have this area and this area. So once it couldn't even cross this one, but if it crossed, this will be in next major area. And then again, this will be like if you're doing like areas, you're gonna have like this area here. This is gonna be like a major selling area right there. So all this area here, and then you have another one here, which is like the dump from last time. So there's another dump. So this is stuff that I don't really look at when I'm putting the lines, but I just put it in my head so I know. And also this area, I know that that's gonna be another level of people holding bags, because this one it dumped. So you have people holding bags from here. They probably didn't come out again here because they were greedy, and they're probably still holding the bags. So you have bags in here, bags in here, bags in here, and now you have bags in here. So be mindful of these levels too, beside the trend lines. But if it's too complicated for you, trend lines will still do the job. So, but this just gives you like, that this is a stronger area, like, like a zone. This is more of a zone than bid and ask. So like the buying and selling of the trend lines, or resistance and support and stuff like that. This is more of a zone that you need to be like mindful of, because it's a bigger zone. No problem, Tina. You're more than welcome. I like the early jump. Yeah, I mean, if you can play it. Stuck. So again, man, it's just, again, guys, if it works for you, it works for you. That's the beauty of trading. Yeah, if you make that money on the jumps, keep doing it. If you're scared to do it, or you're not comfortable with it, don't do it. So again, it's gonna come back to what you prefer, what you like, and maybe what works for you doesn't work for me, and that's fine. It doesn't have to, and that's the beauty of it. Statistics. I don't use them anymore, man. I used to have them. I think I took them off. I don't use them anymore. But I used to have statistics. But I think, again, I don't think these are for these stocks. I don't think so. Like, to use them on larger, like large caps or mid caps, yes, it's good indicator. But I think on like the small pump and dumps that we play here, I don't think so. The problem with indicators that are not built for that stuff is that they're not made for these. So they will give you a lot of fake outs. Like, they will do a lot of fake outs. Even sometimes near the RSI will be overbought and oversold, and the stock will keep either dumping and keep going. So even the RSI in here, which is like what a lot of people use, is not that accurate. And that's why I don't use indicators. Period. I don't have a preferred one. I have none. Like, yes, I love RJ1 now that I've been using, but again, it's a secondary opinion for me. It's never gonna be like my primary is always the chart, because indicators, they always lag, especially with these. You get these spikes here, they mess up the indicators. When you get like these big spikes up and down, they mess up any indicator, whatever indicator you're using, and that's the problem that you have with indicators. So that's why I keep saying, like, just learning the chart patterns and the candles and the volume is your biggest thing, because indicators will always mess you up. Like, it's good to have a second opinion, but always have your first opinion from the actual chart, from the candles, from the volume, from the level 2. These are the things I look at. How do you play jumps? Wouldn't you be chasing in? I get in. Well, the thing is that I don't chase, man. I don't chase. Sometimes I do. I get like really into it, but when I see these candles, I wait. I wait to see what is it gonna do. Like, I wait for the volume. I wait for level 2. I wait for a trend or something that I see. Like, is it doing a trend? Like, if you notice here, like this even was a little bit of a trend. Like right here, you had this like little trend here. But again, with this here, I waited. Yeah, I played it, but I waited for market to open. So even that you had all this here, you had this move, but I was patient because I seen this trend now following here. So that's why I didn't get into these like bam bam. I waited. That's when I started watching it. I put my lines. I'm watching the lines, and then it kind of broke here. I should have went in here, but I didn't, because I seen all these wicks here. 1 wick, 2 wicks, kind of broke, and then broke another wick, and it just been like, it just gets stuck in this area here. So I waited, and that's when I waited, but I entered here. That's when I entered. I think I took it at 340, I think 340 some 341 or something like that. I think I entered here and I played that. I entered here. That's when I waited. So I waited for this confirmation. For me was this. I waited for this break with volume, with market open. We broke through it, broke here, and then I waited. So I waited first candle, second candle, third candle, and I think I started taking positions in here or here. Between these three, somewhere here, I started taking my position here. So I waited for all this. So I waited a break of a trend. This is the downtrend line. So you basically broke the trend line. This is the first confirmation. Then second confirmation, third, fourth. This broke through. It held over it. So you broke through it. Yes, it's fine. You had the wick here. but it wasn't the wick on the line. So if you notice the difference between this wick and this wick, this was a tie. It's basically the whole body is a wick, but this was volume with the long wick, which is fine. But the thing is that it closed the whole body above the line. This one did not. This one is just basically wicked through and came back down. And then this one tried, it didn't even go through, it went down. This one tried another huge wick and then another huge wick. It didn't even close. These are the only two that closed, but then followed by another one like these right there. So that's why this wasn't a good confirmation, but this one was a way better confirmation. So he broke through it. He had another one, yeah, that's a long wick, but this is a reversal of this one. So this is indicating you have buyers, not sellers. This is indicating you have sellers. This indicating you have buyers, and it's still closed above. And this was your entry. This is when you enter here. You could enter here, and that's what I did. I entered and I waited, and then I saw this trend now forming in here. So I played the trend. Played the trend. Once it broke down, I'm out. So I waited, and I think I got out. Like I sold some here, and I think I sold some here, and I took the rest down here somewhere, and I was out. That's it. Because I thought it's gonna keep going, and even here I kind of held it a little bit, but once I saw it breaking the MAs, I didn't want to try. Even that it tried here, but I waited for it, and it never even broke there anymore. So that's why I didn't play it. And this one, as you see, like just kept dumping the whole day after that. It just never broke through. So you have to understand how to get your confirmation. Don't just jump in. Again, you're trying to get the story. So I'm looking at every candle, and every candle I'm trying to analyze candle by candle. That's why I don't like playing ticks, because my brain still needs some time to process these candles. So that's why I'll prefer the 1 minute than the ticks, because I'm trying to read the candles, and it takes me like a little bit to understand what the candle is trying to tell me. So that's how I play them. But I don't jump. Even RJ does a jump, even that we don't trade the same, but even RJ would never jump like that. He will wait for a confirmation or a pullback and then go. So in this case, if he even didn't enter here, you would have entered here in this area also again, because he had a break right there. So you had this nice candle here, and then another one, and then another one that went through with a wick, longer wick, and it kind of closed above, and then you have this one right there. So this was another entry. Yeah, you get a pullback, that's fine, but the pullback, that's normal. You get a little pullback, and then it just kept going. And I think if you even put it on the, I think on the 5 minutes was even prettier. So you had it here. Look at the 5 minutes. It was clean. I was watching on the 5 minutes. It was very, very clean right there. So this was the first one, and this was the second one. So as you see, like the 5 minutes is basically, that's a normal pullback with the body right there, equal right there, and then it went again. No chasing. You don't need to chase. The candles will always come to you. If you plan it right, it's always gonna come back to you. But if you chase it, that's when you're gonna have a problem. So don't chase. Again, man, it's a hit or miss for me. I like to concentrate, as you notice, I concentrate on 3 main stocks for me. And my criteria is based on the setups that I see. So I go through stocks in the morning. I keep going through them quick, each one, do some lines on each one, but then I start like, it's a filtering process. I start filtering the stocks that I don't think I'm going to trade. Either they're because they're below my price range that I don't want to trade, or I don't like the news too much, or they're just purely a pump or stuff. Like I have like filtration process for me that I go through, and then I see the volume, I see how the stock is acting, and that's when I make my decision. I'm going to watch 3 to 5 stocks, and that's it. I ignore everything else. But that's why I'm more concentrated on these, so they end up making me a little bit more money because I'm concentrated on them. I don't just keep jumping, because the more you jump, you're not gonna have time to either know your resistance lines or know what the stock is doing or understand why the stock is doing what it's doing. So it takes time. That's why I don't like jumping from one stock to another stock, and like I prefer to have 3 to 4 to maybe 5 tops that I watch in the morning, I mean, yes, I have my daily watches of some stocks that I watch every day, but these I can watch anytime. They're not my priority in the morning unless they're doing something that I'm gonna play for the day. Then yeah, they become one of my main ones. But most of the time, these are like sidekick watch lists that, if I'm bored of these or I don't find anything at these, I can always go back to them. But most of the time, I will have like this, like 3 to 4. Mostly, I try to keep them below 4. So either 3 to 4, tops is 5. But 3 is my perfect number. I like to keep 3 stock, and that's how I concentrate on them. So I think somebody was asking this in Discord like 2 days ago about how they jump from one stock to another. So I guess that's where you get the idea of that. Yeah, I'm trying to see who was asking this. Somebody was asking this question earlier. Trying to see who it is here. Yeah, Heather was asking the same exact question that I think I answered her. So yeah. So I'm giving you basically the same answer I gave her. So yeah, man, just try to concentrate on one thing. Don't keep jumping around, because jumping around the stocks is not a good idea, honestly. Because you lose everything. So whatever you're looking at in level 2, like you lost all. Like if you're watching here for 10-15 minutes, okay, and then a stock just jumps in front of you, it's hard to process what's going on with the stock, and then you get emotional because maybe you're watching this for a while, you tried to trade it once and you kind of took a red on it, but you're waiting patiently for the right entry again, but then comes the stock that's like flying now, so you get emotional, you see that stock going up, and without doing technicals, without looking at it, you start chasing it because you want to make the little loss that you lost. And I used to do that, so that's why I don't do it anymore. You get holding a bag, do you write it out or just take the loss? I always take the loss, man. Always. I stopped holding bags, even that I do sometimes, and but I don't like, even that I do the mistakes of holding them. But what I end up doing is taking a bigger loss, because I promised myself I will not hold bags no more. So even if I do, I get emotional and I hold the bag for a while, but I will still end up closing it. I'm not gonna hold it through. So I end up taking like big losses because I don't want to hold the bags. It's not worth it. The time and effort and the emotions you get from it, it's not worth it. Because whatever you lose here, again, you can sit for months waiting for it, and for those months you would have lost 100 good trades, that you would have made all the small losses you have taken because you were stubborn. So don't hold it. You're welcome, Trader Sam. Yeah, man, chasing is a big problem. I think chasing and holding bags is the biggest things for new traders. If you stop chasing and don't hold these bags, just take losses. I take losses all the time, guys. I don't mind it. It's a part of the process. There is not a single trader that's always a winner. Okay, if you think you are that one, you're breaking every rule in the book. Okay, if Bill Eichmann takes losses, we all take losses, guys. So just put it that way. Okay, hedge fund managers, they lose money, and they have teams of people working for them, the best minds out there, and they still lose. Sometimes they get it wrong. So it's okay to get it wrong. It's a part of the process. Get used to it. Just remove the emotions from it. I know it's hard when you're day trading and when you have only 3 trades and all the good stuff, but we really can't do anything about it. So if you only have the 1 day trade, you can't take the loss, because then this is a mistake. You shouldn't have traded today. So if you don't have day trades and you decide to get in a trade thinking that it's gonna keep going to next day and now you can get out, then that's your mistake. You shouldn't do that ever. Do you have a trade QQ? I used to, I don't anymore. The SQQs and the QQQs, I don't trade them anymore, but I used to. I used to. Oh wow, SQQ was going up, huh? Yeah, I don't anymore, man. But I used to. I used to take QQQs, JNUG, SQQQs. I don't. I stopped. They're good. They're very good to trade. Nothing's wrong with them. It's just they do not not fit my style right now. But they're very liquid. You can trade them every day, make good money on them. But yeah, can't go wrong with these. But with how the markets are acting now, it's kind of, I don't want to trade the markets. I'm like over the markets at this point with everything going on. So for me, that's why I think I'm not trading even bigger caps like I used to, just because the way the market has been acting. I feel like it's way overextended. I just want to see what's gonna happen with the interest rates for now. Maybe after that I'll start trading again, but for now, I'm just not enjoying the overall markets, how they're acting and how they're going up nonstop. It's kind of getting into me at this point. Yeah, it's affecting my portfolio. Is doing good, but I know it's gonna dump at some point. But I can help you if you have a question for the QI. I mean, I don't mind doing the chart for you if you have a question. Oh yeah, you can do well with them. You can do very, very good. I mean, I know this, I don't like, QQ is not opening for me. Man, look at this. This is insane. Insane. This is insane. I cannot believe it. SQQ, like, see, this is normal for SQQ. Like, this here, it's up, down, which is normal because, market is going up or sometimes pulling back, going up, pulling back. But this here, this is just insane. I mean, yeah, I know that's the inverse, but I mean, it's just not right. Like, this is not right. I mean, yeah, we have this one here. You had this one here, and you had the pullback. I'm expecting even if like this pullback is gonna be harder than this one, like massive pullback. And are you playing them like options, or are you playing them like actually trading the instrument itself, or what? But overall, man, like, I mean, when I used to trade them, they were more stable than that for me. I used to play like in and out, like, you get in and a green game, and I feel like right now it's just green, like green, look at that, green, green. Like, it's just, even when it drops, I mean, like, and it just skyrocket like this. Look at the drop, and then next morning it's just bam. It's ridiculous. Oh, you play TQQQ? Okay. Yeah, TQQ. That's the Ultra, right? Yeah, that's the Ultra Pro. Yeah. Yeah, man, I haven't traded these in a very long time. Very, very long time. Like, I think I stopped trading them like 2018, maybe 2019. I haven't traded them since that time, probably. Yeah, I got more into I started concentrating on stocks lately, and I stopped trading all this stuff here. Like, I used to watch the VIX, the take charts, all that good stuff, but I don't anymore. Even that these are like, actually, I like these are easier to manage emotionally than these stocks. They're more like, if you're into the markets and you understand the mechanics of the markets, or before, I don't know how it is. I'm not trading these now with the markets going, but before, if you were understanding the markets, reading the news, and like on top of stuff, you can trade these easily and make good money daily on these, no problem. That's the beauty of these. It just follows the market. So if you have a bigger concept, if you're into like the macroeconomics, microeconomics, and getting on top of the news and all that, yep. I mean, that's how it goes. SQQ and TQQ. But again, man, it's not for everybody. I think these are like, again, if you're into markets and more into investments and you're watching more of big caps news and watching a lot of stuff, these are good to trade. This is the same for me. Like that's why I still trade a couple of big stocks for me. Like AMD is still one of my favorite stocks to trade at this point. I know Tesla used to be, but I don't trade Tesla at this point with what's going on. But AMD, Tesla for me were great for a while. Used to trade even Snapchat for a while. I don't remember what else I used to trade. But some of these stocks I used to trade like on daily basis. But Tesla was like I used to trade Tesla almost daily at some point for a while. I was trading Tesla every day. Doesn't matter, long, short. You just get this pattern. When it's not too volatile, it's pretty amazing. You could make good money every day on it. I'm struggling to find myself trading. I tend to hold winners longer, which makes scalping. So you're holding winners longer. Are you making more money, or are you holding them till they go red on you? That's what I didn't get. Just so I can get the right question out of that. I mean, because if you're holding winners and they're going up your way, that shouldn't be a problem. That's actually a very good thing, and you should just be taking profits as you go. But if you're holding them till they turn red on you, that's a big no-no. Like, I think that's one of the things I keep teaching everybody here is that I take profits all the time. I don't wait. I always take profits, even short or long. I always take it. It's on the backside, but wait, like you have to ask yourself, why are you holding? That's the question you should ask. Like, why are you holding? Like, why are you not selling some? Are you waiting for this magical 1000%? Like, before you got into the trade, what were you looking for? Like, what was your goal in the trade? That's what you should ask yourself. Like, if you see in here, even here, my goal here was that my minimum goal, I knew that my minimum goal was to cross this line, which is the highest for this. I think it was like around 4 something, closer to 4. It's like 3, yeah, almost 4, 405. So my goal for this trade, okay, when I got in, was to see a cross of 4, okay. And I think I had a sell at like, I don't know, remember 415, 420, something like that was my first big sell of at least 50%, because that's my goal. Like, I had a goal in my head when I got in. Yeah, so again, I mean, you have to have the call, man. You have to know when are you selling. You don't just get in a trade. I mean, if you're just in it for a quick in and out trade, scalp trade, that's fine. That's a different story. Then you're looking for the make the quick 20, 30 cent, and you just get out. If you're playing my style or just holding long for a target, then you should know your target. And for any case, let's say I was playing this, okay, and this turned against me like it did here after I sold, okay. Let's say that it turned here. Am I just gonna keep holding it because I was looking at my target? No, I was taking to get out because it didn't go my way. So before I get in, I know my stop is here. My stop was somewhere here in this area. I don't remember exactly, but I think it was like right here or something. It's like let's call it here. So my stop was like I would call it like 20 cents, 30 cents is my stop. I was looking to make at least 60 cents to 80 cents as a minimum for my target. And I got my target, but what if I didn't get my target? I will get my stop and I will just stop out. So before I'm getting into the trade, I know what I'm gonna stop, what I'm gonna sell. If you don't have these two, then you shouldn't get in the trade. And why are you even jumping in the trade? Because the questions that you need to have is that why I'm in the. That's why you ask yourself before you get into trade, what is my target? Where am I selling? And let's say I sold here and the stock kept going. There's no problem. I'm just gonna keep selling. So I sold some here. I sold if it keeps going on top, I'm selling more. Keeps going more, I'm selling more. I'm selling. I keep selling 50%, and then another 25, and then another 25, and it just let's say you have 1,000 shares, and I sold half. Now I have 500, and then out of the 500, I can sell another half. It's 250, and then I have from the 250, I sell another half. That's 125, and then I sell some more. 70 shares, 80 shares, or whatever. I can start selling in 50 shares, bunches, but I'm selling as I go. Selling as I go. Always my first sell is my first target. I try to get at least from anywhere from 40 to 50% of my position once I hit my initial target, just so I'm in the safe side. So if the stock does this, which it did, at least I took some. But because let's say I was so greedy, I didn't sell here, and now it went against me, and now I have to get stopped out. So now I went from a full green trade to a full red trade. I didn't even take anything. All I took was red. So even that I seen a lot of green, I was up a lot on my full position, but because I didn't sell, and now I'm selling in the red. So I went strictly from green to red because I didn't sell what I was supposed to sell. If that makes any sense. Yeah, so the problem is that if you already have a target and you're passing it, then why not selling? So you're already answering your own. So you already know the problem and you actually know the answer to your problem. So the thing is, it's just, I think you just need to write it in front of you. Get a piece of paper, put it on the wall in front of you. I'm not joking, by the way, I'm being serious. Everything you do wrong, and especially if you know that you're doing it wrong and you know why you're doing it, write it down on a piece of paper and stick it on the wall in front of you. Put it on the monitor in front of you, get a sticky note, put it on the monitor in front of you. I'm not joking. That's what I used to do. That's how I got better. Because I see it and I tell myself, don't do this. It kind of reminds me, okay, I'm not going to do this today. I'm not going to do this today. I'm not going to do this today. You know? It's going to work. Just get sticky notes, put them on the monitor, get a piece of paper, put it on the wall, and just keep repeating it, because when your eyes see it, your brain triggers you to not do it. But when you just think about it the next day, when you don't see it, it kind of get emotional, and if it's not in front of you, you keep doing it. But always set at your targets, man. Always set at your targets. Always get. If you stepped out, get out. If you plan to get out at a specific price, if you want to hold it for, if you see something happening, maybe you don't want to get out in this candle, and you're like, okay, maybe I'll give it like 5 more cents or 10 more cents. It's fine. Do that. But if it breaks that, then you need to honor it and get out. So even if you're not going to get out here, let's say like I was like, oh no, this candle was too much. I think it's going to, now it's going to reverse. Or you see something that maybe is triggering you, think that the stock is might reverse, even that it's at your stop or across your stop by a little bit. Okay, maybe I'm going to adjust my plan just a little bit and I'll wait for here. Even that it's 99% of the time, you'd be wrong. But let's say it went, let's say just for the 1% chance that it might go your way, at least you don't feel bad about it if it goes your way. Yeah, you're going to take a little bit bigger loss. But again, if you believe you see something, okay, I don't do this all the time. It's only if I see something, a spike in volume or a couple of weird candles of what am I supposed to stop, and I want to adjust. Maybe I'll take a bigger loss just to play that bet. But I prefer that you stop where you were initially supposed to stop. But if you have to adjust a little bit, but again, don't just keep holding it now, because now you took, like, you only do this if you are willing to take the loss and it's going to be a bigger loss. So let's say your loss here was like, let's say you were going to lose like $70, okay, just for easy numbers, and you know that if you held to here and adjust the plan that you're going to take 100, if you're okay with taking the 100, then go for it. But if you think the 100 is going to get you emotional and now you're going to hold the bag and it can go all the way here because you're holding it back, then don't do it and stick to your stop. Eric, good strategy. Thank you. I appreciate it. Keep it journal. Yes, keep it journal. That's true. You're welcome. But again, you know, Eric is also saying good thing, and that's what I tell you again, guys. Yeah, go to TraderView or something. Either write the trades in a notebook or go to one of the free ones, journal your trades, and that's gonna help you. Because you know what, journaling your trades is gonna show you a lot of things. It's gonna show you what are the most profitable trades you're in. Okay, it's not just what most, like what time of the day are you doing the best, what kind of plays are you doing the best. Is it penny stocks, or is it more of mid cap stocks? Is it very low floats, or like or more of a higher float? You know, am I better on the long side, the short side? You know, what strategy worked best for me? And then from journaling all these trades, you're gonna come out to be like, okay, you know what? It seems that I'm making most of my money between that time and that time, and my bearish setups are these stocks that are averaging from $2 to $4. I make most of my money on these with these floats and this and that. That's how you get your strategy. Yes, the more info you put in journaling when you start, the better it is, because you're still trying to figure out your niche. So to get your niche in, you need to write down the trades you're making. You know, float size, what time of the day, when did you enter, did you wait for confirmation, what kind of setup did you play, what made you get in this trade, why did you lose if you lost, and why did you win if you win. Okay, time of day, all this makes sense. And then when you start adding 1, 2, 3, 4 after a month, 2, 3, you're gonna start like, you know what, I'm winning on these. What is the float? Is the float of the stock, man. Whatever the, you know, stocks have a float, is the tradable float. It's the amount of shares available for us to trade. So let's say the stock is like 5 million shares, or I don't even remember how much was that, but let's say it's that. That's all we have to trade. There's only 5 million available shares for us to trade, the whole market to trade in the given day. I'm not talking about the private one or the locked ones or any of that. The float is basically what we can trade in the market at this point. Some floats are billions, some floats are less than a million. The lower the float, that's why you get these massive moves, because some stocks have like a million float and there is basically not enough shares. That's why they keep halting and all that's because of the float. That's why float is important. So, you know, some people don't like playing low floats for that reason. At some point, I wasn't playing low floats. I stopped, like, I was playing low floats, and then I stopped, went to mid caps, larger caps, and then I went back to low floats. Yeah, TraderView is good, man. I think TraderView is the best. It's worth every penny. It gives you a lot of details that you can really dig into it and try to figure out where are you making mistakes and what's working for you, and it breaks down everything for you. Sometimes I stop losses, but I would say most of the time I do it manually, because I know we trigger on market, and especially if I see something, just trigger on market or bid or ask. Like, depends how I see it going, but that's how I normally do it. So I mean, sometimes I still do it, like I have it, but again, most of the time I will maybe trigger it. But for you guys, if you're beginning, I would recommend that you guys put it. Always put it on market too. Don't ever put a stop limit for sure, especially for these stocks, because you know what? Sometimes they drop so hard beyond your stop, and especially that most of the time that all of us, we pick up a spot like a stop loss that most traders are in it. And the thing is that when you put a limit, the stop will go through your limit and you'll never get triggered, and the stock is just going to keep dropping. And since you passed your limit, it's never going to trigger. So you might just come back from a coffee break or a bathroom break, and the stock is now down all the way here. So always do a stop market, never do a stop limit. So if it triggers, it just trigger market. Stop limits is good only like in specific stocks, and I don't even recommend using it at all, to be honest. You can do a trailing stop, that's something good. I used to use trading stops, I don't anymore. But actually I think if somebody's suffering with all this mentality of selling, you could do a trading stop. But the problem with trading stops is just gonna trigger you out the whole position. But it might be good for somebody that having problems scaling out. At least this will scale you out, and if it drops against you, it's just gonna take you out. So trading stops are good. I used them for a while. I don't use them anymore, but trading stops is also a good thing to use also, because I mean it pushes you to take profit, kind of. That's the whole thing out of it. You're welcome, Joe. Did I answer your question? I'm not sure if you had a question. I didn't see your question, but you're welcome. I'm not sure if I missed it somewhere. Answer your question. Maybe I answered it through somebody else. Hey, what else we have, guys? One questions. Jeez Louise. Really? One. Always. Unbelievable. Truly unbelievable. Oh, these damn markets. Looks like it's gonna be another day. Another day. Sheesh. Fantastic. You're welcome, Eric. I appreciate you. Well, I guess we answered all your questions. If you don't have any more, I don't mind going to sleep. I just came from my vacation, guys. I didn't even take a break. I just wanted to see if I can do a quick one for you guys, because I haven't done one last week. So at this point, since I don't see any more questions, unless somebody has questions, I can still answer them. But if we don't, you're welcome, Trader Sam. welcome, guys. Okay, at this point, I can call it a night, and I'll see you tomorrow. Don't forget they changed the clock today, guys, which I didn't even know of. I just saw that when I was halfway home. I was like, why is my time different? And so yeah, just know that so you can sleep better. Don't mess up your trading day tomorrow. Because right now it's like what, 10:30 Eastern time, I think, at this point. Yep. So we'll see you in like 8 hours tomorrow. You're welcome, guys. I appreciate you all. Yes, thank you for being here. I'll see you all tomorrow.